We're jumping straight into SEALSQ today. Everyone is watching the price action, but the real story is the aggressive pivot into post-quantum cryptography and the massive global facility expansion.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And hey, before we get into the weeds of quantum computing and all these huge factories, do us a quick favor. If you want to help us simplify this crazy market for everybody, just hit that subscribe button and give us a like. It really does help.
It tells the algorithm what's up.
Totally. Okay, so let's unpack this. SEALSQ. I mean, this ticker seems to be on everyone's watch list lately.
It really has been.
Yeah.
And, it's one of those companies that it sits at a really interesting intersection.
How so?
Well, on one hand, you've got the whole semiconductor cycle, which is, a beast of its own. It's super cyclical, very capital intensive.
Right.
But on the other, you have this futuristic, almost sci-fi story about the quantum apocalypse.
The quantum apocalypse. It sounds like a bad movie title, but it's a real thing, isn't it? I mean, that's the core of the bull case here.
It is.
We aren't just talking about making faster chips. We're talking about making chips that can actually survive the next generation of hacking. But before we get to that, the solution, just help me understand the problem. Why is everyone freaking out about quantum computers?
So to really get the bull case for SEALSQ, you have to understand the lock they're trying to build a key for. Or, well, a new lock, really.
Okay.
Right now, most of the world's digital security, your bank, defense grids, your smart car, it all relies on encryption methods like RSA or ECC.
Which are basically just super hard math problems.
Exactly.
Right.
Really hard. They rely on factoring these massive prime numbers. For a normal computer, even a supercomputer, it would take literally thousands of years to crack. But then, the quantum computer comes along.
And this is where it all gets a little weird.
It does. Quantum computers, they use qubits and something called Shor's algorithm to basically cheat at the math. A powerful enough quantum computer won't take thousands of years. It might take hours.
Hours.
Maybe even minutes. And the second that hardware is real and working, all that traditional encryption is just, it's dead. That's the cliff everyone sees coming.
Okay, but here's the pushback I always hear. People say, quantum computers are still years away. So why do we need to care about this today? Why is SEALSQ a story for 2026 and not, say, 2035?
That is the single most important question. And the answer is this concept called harvest now, decrypt later.
Harvest now, decrypt later. That sounds ominous.
It is. Bad actors, state-sponsored groups, they aren't waiting for the quantum computers. They are stealing encrypted data today.
Okay, but they can't read it.
Not yet.
Okay.
So they just store it, they're harvesting it, and they're just waiting 5, 10 years until the tech exists to unlock everything.
That's actually terrifying. So if I'm a defense contractor or a bank, I can't wait until 2030 to upgrade my systems. The data I'm making today needs to be safe in 2030.
Precisely. Think about a satellite. If you're building a satellite that's going to be in orbit for 15 years, you can't just fly up there and swap out a chip later.
You have to be quantum ready from day one.
Before you even launch. That's why the demand is happening now.
So the pitch for SEALSQ is they're selling the shield for that sword. They build semiconductors, microcontrollers with what's called NIST-approved post-quantum cryptography, PQC, built right into the silicon.
And built into the silicon is the key phrase there. This isn't just, a software patch you download. SEALSQ is embedding these defenses into the hardware itself. That is their moat.
Let's talk about that moat, because they aren't just a factory stamping out chips, right?
Yeah.
They made a pretty big move buying a company called ICALPS. Why was that so important?
Oh, that was crucial. It gave them the ability to do the ASIC design, the actual architecture of the chips themselves. In the chip world, it's one thing to manufacture a design someone else gives you. It's another thing entirely to own the whole design. So now they control the design, the manufacturing, and the trust services that manage the keys. It's end-to-end.
Which creates stickiness. I love a business with high switching costs. But simplify that for me. You mentioned a hardware root of trust. Why does that matter more than just, good software?
Think of it like a house. Software is the lock on the front door. You can change the lock, but the hardware root of trust is the foundation.
Oh, okay.
If the foundation is cracked or someone can just tunnel up through the floor, who cares about the lock on the door? It means the device's identity is verified at the physical level. It's literally burned in.
So I can't just hack it from a laptop somewhere.
Exactly. You'd need physical access, which is much, much harder. And once a company designs their car or their satellite around SEALSQ's architecture, ripping it out is just a nightmare. It's so expensive.
That's the moat. Once you're in, you're in. And this isn't just theoretical tech, right? I saw they were at Davos.
Yeah, just this January, they had a demo with actual physical AI robots using their PQC. It was a proof of concept to show, hey, this isn't just for servers in a data center. This is for robots, IoT devices, stuff that moves.
That's the show me part of the story. Okay, let's talk about the fuel in the tank. High-tech ideas are great, but they burn cash. What's the balance sheet look like?
This is where the story gets really interesting. Usually, a company this size, pushing this kind of tech, you expect them to be, running on fumes.
Right.
But SEALSQ is sitting on a massive pile of cash. We're talking about $425 million in liquidity.
$425 million. For a company this size, that's a war chest. But, and I have to play devil's advocate, is it really a war chest? Semiconductor factories are money pits.
That's a very sharp observation. On the surface, $425 million looks safe. It gives them a runway that others just don't have.
But you're right to be skeptical. In the semiconductor world, that money can vanish, when you start buying equipment.
So it's not money in the bank, it's survival money for the expansion. It is. It's CapEx waiting to happen. But it does let them be aggressive. They have a $35 million quantum investment fund, so they're investing in the whole ecosystem, not just their own stuff.
That's an interesting signal, investing in startups while you're still growing.
Yeah.
But they also have a pipeline to back it up, right? I'm seeing something like a $170 million pipeline for the 2026 to 2028 window.
That pipeline is key. It suggests the demand is starting to materialize, but honestly, even bigger than the pipeline is the physical expansion. They're putting serious money into the ground.
Okay, let's hit on that. Global expansion, France and India.
Yes. In France, they've announced plans to invest another $200 million by the end of 2026. That is a massive commitment to expanding their production in Europe.
And then India, they signed an OU with the Gujarat government.
Usually, when I hear expansion into India, I just think cheaper labor. This feels different.
Completely different. You have to look at the map. The world is de-risking its supply chain away from China. You have the U.S. GPS Act, European initiatives, and now India is raising its hand saying, we'll be the new hub. The whole Make in India thing.
Right. But it's hard to break in. By signing this MOU with Gujarat specifically, which is becoming India's Silicon Valley SEALSQ, is getting a state-sponsored fast lane. They aren't just building a factory. They're integrating into India's national sovereignty stack.
Sovereignty stack, I like that.
It's powerful.
Yeah.
Governments don't want foreign chips for their passports or their defense. They want domestic production. By building in India, SEALSQ becomes a local player in a massive market. It's a geopolitical hedge. So, summing up the bull case, you've got the tech for an existential threat, a sticky hardware model, a fortress balance sheet, even if they have to spend it, and this smart global expansion. It sounds perfect, it sounds compelling, but, and there's always a but, we have to look at the flip side.
Let's do it. Let's pivot, because if it were that perfect, we'd all be rich. What's the bear case?
First and most obvious issue is valuation. We have to talk about the multiple.
Yeah.
This stock is trading at a very rich valuation, somewhere in the range of 23 to 31 times sales.
Whoa, hold on. 30 times sales, not earnings.
Sales. Revenue. That's right.
Okay, put that in perspective for me. What's a normal company trade at?
Well, the S&P 500 average is usually around, 2.5 to 3 times sales? So you are paying 10 times the market average for every dollar of revenue SEALSQ brings in.
Ooh, that is nosebleed territory.
It is. And look, even the kings of the semi-world, like NVIDIA, they trade at high multiples, sure. But NVIDIA is printing money, SEALSQ. They're losing money.
So investors are pricing this stock like it's already won the race. They're pricing in perfection.
Exactly. When you pay 30 times revenue, you're betting on exponential, uninterrupted growth for years. If they stumble, if that pipeline gets delayed by a single quarter, the stock could get cut in half and still be expensive.
And despite that huge cash pile, they are burning through it, right?
Yes, that's the other shoe. They're still generating losses. And remember that $200 million for France, the $35 million fund, that's cash going out the door.
So the burn rate is high.
It's very high. Having $425 million is great, but if you're burning it on factories that aren't making money yet, you're in a race against time. They have to execute perfectly.
It's that classic field of dreams risk. If you build it, they will come. But building fabs is notoriously difficult.
Exactly. Delays in construction, regulatory hurdles, supply chain issues.
Yeah.
Any of those things could slow down the revenue. And all the while, they burn cash.
What about the broader market? The whole semiconductor sector has been wobbly.
That's a huge headwind. We've seen a rotation out of high-growth tech because of payroll data, inflation. SEALSQ is not immune. In fact, as a smaller, more speculative name, It's what we call a high beta stock.
Meaning it swings harder than the market.
Right. When the market sneezes, SEALSQ catches pneumonia. And right now, institutional money is feeling risk-averse. These high-multiple, money-losing companies are the first to get sold.
And the volatility is just nuts, right? It feels like this stock moves 10% on a single headline.
It's incredibly volatile. The price is driven by news, not earnings. And interestingly, if you look at the sentiment scores from big data providers, they're mostly neutral.
Neutral, even with the robot dogs at Davos.
Yeah. It suggests that the big money isn't fully sold. They see the headlines, but they're waiting for the numbers. It's a show-me stock. The market is saying, cool tech, now show me the profit.
So, high valuation, money-losing company in a volatile sector, betting it all on the future. That's the definition of high risk, high reward.
It is, and that brings us to what's next. If you're looking at this, you need to know what triggers to watch. You can't just buy it and forget it.
Right. Let's break that down. What are we watching for, say, the next 30 days, rest of Q1?
First, construction updates. We talked about France and India.
Yeah.
We need to see confirmation. Groundbreaking ceremonies, finalized contracts, anything tangible.
So less we plan to and more. Here's a picture of bulldozer.
Exactly. The market rewards progress, not promises. Especially that Gujarat MOU. And MOU is just an understanding. Turning that into a real binding agreement would be a huge catalyst.
What about earnings? Q1 2026 is coming up.
Yes, and for that report, you have to look past the top line. You want to see that pipeline conversion. Are they starting to turn that $170 million in opportunities into actual signed deals?
Okay.
If they guide down on that pipeline, the stock will get hammered.
And there's a regulatory angle, too, with NIST, right?
Huge. The National Institute of Standards and Technology, they're setting the PQC standards. As those regulations become official, government agencies and defense contractors will be legally required to upgrade.
So if the government says you must be quantum-proof by 2027, suddenly SEALSQ's phone starts ringing.
Off the hook. Regulatory tailwinds are the strongest tailwinds. Demand becomes inelastic. They have to buy it. So you're watching for any announcements from NIST.
And finally, the macro. Can't ignore the Fed.
Never. CPI data, interest rates, it's all critical. This is a long-duration asset. If rates stay high, it hurts. If we get clarity on rate cuts, high beta stocks like this often lead the rally.
So if inflation cools, the risk on trade comes back, and SEALSQ could fly.
That's the playbook.
Okay, let's wrap this with the lowdown.
Let's do it. All right, here's the summary. SEALSQ is a fascinating play. On the bull side, you have the post-quantum tech the world will eventually need. You have a real moat with their hardware. And they're sitting on a $425 million cash pile that they're using to expand. But on the bear side, you're paying over 30 times sales for a company that's losing money and burning cash. And you're fighting sector headwinds and betting on perfect execution.
It's a classic binary outcome. If they pull it off, they're a market leader. If they stumble, there's a long way to fall.
That's a fair assessment. And here's the final thought I want to leave you with. We talk about the quantum apocalypse, but timing is everything. Ask yourself this. Is the threat of quantum hacking immediate enough to justify this valuation today? Are companies really going to rip out their current systems in 2026 for a threat that might mature in 2030? Or is this a case of being right on the tech, but just too early on the trade? Because being too early is the same as being wrong. That is the billion-dollar question. Adoption curves are rarely as steep as people hope.
Something to think about. All right, that's our look at SEALSQ. We hope this helped. If you got value out of this, please hit that like button. It really helps us out. We'll see you on the next one.
Thanks for listening. Stay curious.